Now imagine being able to test out your trading strategy against years of market data without risking a single dollar. Backtesting offers exactly that. In this video, I backtested a simple strategy, the moving average crossover strategy, and I found its win rate based on 30 trades going back 4 years on the 4-hour time frame. Just a reminder that Forex trading is risky. 75 to 90% of traders lose money. Anything discussed in this video is for educational purposes and it should not be considered trading advice. Hey, I'm Annie from FX Scouts. On this channel, we explore the art and science of successful trading. And in this video, I want to show you a very important tool that you may want to add to your trading toolkit, and that is how to backtest. In this specific video, I'm going to be showing you how to backtest the moving average crossover strategy on the 4-hour time frame using the Euro USD. And I'd really like it if you stuck around till the end because I'll show you the win rate of that strategy. So in this video, I want to show you why backtesting is not just an option, it's a necessity. And I really feel that this is how you can take your trading to the next level. So let's get started. So before we get into the specifics of how you backtest, I want to show you why you need to backtest. Firstly, as I mentioned earlier, it's a risk-free strategy assessment. And although it doesn't perfectly mimic live trading, it's a quicker way to check how a strategy performs in past markets. Now, of course, demo accounts are useful and I would use this alongside a demo account, but backtesting gives you a quick insight into how your strategy would have performed. Next, it helps you to understand your strategy. So during backtesting, you can review many trades and it improves your ability to recognize patterns and price behavior. And I find that this process is essential for checking out how your strategy would have performed in different trading conditions. Then thirdly, it helps you to build confidence. So after reviewing dozens of trades, you develop a very strong sense of how the strategy performs, including its win rate, its trade duration, and then common losing streaks. And why I find this important is that as you build confidence with a trading strategy, you won't get freaked out by the losing trades and you'll know that that's just part of the process. So it won't affect your trading psychology as much. Now, before you start with backtesting, there are a few factors you need to take into account and kind of a few rules that you need to follow. Firstly, you need to decide on how much historical data you need to look at. So you need a big enough sample size, basically. So if you're trading on, for example, the 15-minute time frame, if you're a day trader and you make very quick trades, you're in and out all the time, then I would suggest taking 2 to 3 months of trading data and analyzing that. Whereas if you're a trader that trades on the daily, weekly, or as I do, the 4-hour time frames, then you may want to go back a few years. And a good rule of thumb is to aim for 30 to 50 trades to get meaningful results and to make sure that the results you're getting are statistically significant. Next, you want to look at the market. So some traders backtest a single market or instrument, but many will want to test across multiple non-correlated instruments to avoid skewed results. And the reason you want to be aware of testing your strategy on correlated instruments or instruments that move in the same direction at the same time is because it will limit the test's effectiveness. You won't get very good data from those types of tests. So you want to test on instruments that are quite different. Thirdly, one of the most important aspects to take into consideration is your trading rules. Backtesting requires a clear set of trading rules, and these rules need to be consistent and specific and follow a checklist format to ensure repeatability. And you may want to print out an example of the perfect trade setup so that you can actually see it as a visual reference when you're performing your backtests. For example, it should include the market structure, indicators, entry rules, your risk to reward ratio, your stop loss, and then of course your exit rules. And what I like about backtesting is that it allows you to test different exit approaches. And to save time, you can test multiple exit strategies in the same backtest. So for instance, you might test different reward to risk ratios like 2 to 1 or 3 to 1 or 1 to 1. And you could also test how a trailing stop would have performed on a specific strategy. And this helps find the most profitable exit strategy without any extra effort. Very important, and very obviously, if your strategy is not profitable during the back testing stage, then it likely won't be profitable in a live trading environment. And if it is barely profitable, i.e. is only profitable by a very small margin, then I would also be very cautious in using it in a live environment, because back testing results are usually better than the live trading results you'll get. Okay, so now that we've discovered why you should back test and we've got some rules for how to back test, I want to show you how to back test the EMA Crossover Strategy on TradingView. So now when it comes to backtesting, of course, simplicity is key, and this is why I've chosen two very simple indicators and a very simple strategy to try out, and I've created the rules that I'll get to just now. But before we jump into that, I want to show you TradingView and how you use TradingView to backtest a strategy. So you use the bar replay function, and it's very useful because it allows you to go back in time and simulate the market as though it's live. Now, tracking is also a critical part of backtesting. So another tool you want to use is a simple Excel spreadsheet or LibreOffice spreadsheet, which is what I use. And this will allow you to record your trades, which is very, very important. So as you can see here, I've named this the 50 EMA, 200 EMA Crossover Strategy on the 4-hour time frame on the Euro USD. And here I record the date, the time, the stop loss in pips, your profit target in pips, and then how many pips were won or lost. And as I said earlier, it's also possible to test out multiple exit strategies. So you can create a few more columns for the results of those strategies. So for example, I tested the strategy on a 1 to 1.5 risk reward ratio, but you could test it with a 1 to 1 ratio or a 1 to 2 ratio, and then record those results. You could also compare it on different time frames. So I just did the 4-hour time frame to make it simple, but you could test it on the daily, the weekly, hourly time frames, and then again, compare your results and see what your win rate may be. Okay, so to jump into the strategy. So I first opened TradingView, then I set up my two EMAs. These are the 50 and 200 EMAs. Again, remember that this is for demonstration purposes. I don't want to complicate it too much because backtesting can be a complicated process. So I just used these two indicators for simplicity's sake. I then set my time frame to the 4-hour time frame. I then rewind as far as I want to test. And as you can see, I've already backtested the strategy 30 times to make it statistically significant. And noted on the chart whether it won or lost. But I found I had to go all the way back to October 2020 to find enough trades. So that's something you also got to be aware of when you're backtesting, is just how far you need to go back in order to find the 30 to 50 trades you want to test. Another thing I want to mention here is I never test trades that would be taken between the hours of 9 p.m. and 7 a.m. just because I know I'm not going to be at my desk at that time. And so the results from trades taken between those times would actually skew my results. Okay, so firstly you find the crossover of the EMAs. Here we see the blue 50 EMA crossing above the pink 200 EMA. Then to ensure the crossover has occurred, I only enter on the third candle after the crossover. So this is candle 1, candle 2, and candle 3. And now because the 50 is crossing above, I set up a long position. Then I set my stops 10 pips below the 200 EMA for a long position. And if it was a short position, on the other hand, it would be 10 pips above the EMA. So here the 200 EMA is at 1.1760. So I set my stop loss at 1.1750 on TradingView. I just double click on the long position there. Next, I set my profit target, and this I set at a 1 to 1.5 risk reward ratio. So I can see the ratio if I drag the green bit up, and there we have it. And it's set at 145 pips above the entry. And as you can see, when I allow the trade to play out, it actually hit my stop loss. And as you can see here too, the next two were losses too. And then of course you can see the win. So now that you can see basically how I set the trades up, and I did this all manually, I had to go back and physically perform every trade. And as you can see, I tested it 31 times and I found that the strategy lost 14 times and won 17 times with a risk reward ratio of 1 to 1.5. which basically means that over the period I would have been profitable, especially with a 1 to 1.5 risk reward ratio. And what I also like about backtesting is that it allows you to see patterns on the charts. So what I noticed was when there was a trading range and the EMAs were crossing back and forth over each other, I made more losses, and especially on the long positions. But when there was more of a trend and a specific direction, then the trades were winners. Noticing these patterns will help you to refine your parameters and also maybe refine your trading rules. So at the end here, I just want to say that backtesting is very important. It's helped my trading tremendously, and I really think that it'll help you to create strategies that you know will work, and it'll help you to see the pitfalls of those trading strategies. And although it doesn't mimic the live environment pressures and psychological pressures that you will encounter, it definitely gives you insights and confidence with your trading strategy. Thank you so much for watching. I hope you found this video valuable, and please continue to tune into our videos because we want to create more videos on different strategies and provide the results of the backtesting and then how they played out in terms of their win rates. If you enjoyed this content, please give it a thumbs up, and if you're not already subscribed, please subscribe to our channel and hit that notification bell. Cheers.